On Holding reported earnings and results were really cheered by the market. Shares are up about 17.7% as I'm recording. Around noon on Tuesday, we saw continued growth from ON, which obviously we should expect. This is a company that's expecting to double its size over the next 3 years. And those margins continue to be really high, nearly 60%. So I wanted to dig into the results despite being in a temporary studio here for the next couple of days. I wanted to give my thoughts on exactly what's going on. My name's Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's get right to the results. Here's a look at the quarterly results. You can see that there was 20.9% growth year over year. This is in Swiss francs. This is one of the things that the market was really confused by last quarter, but most of ON sales is actually in the US. So those are denominated in US dollars. When the Swiss franc gets stronger and the dollar gets weaker, it actually makes those sales look lower when you're looking in through the lens of Swiss francs, which is what this earnings report is. That's why we've seen slower growth on a reported basis than on what they call a constant currency basis. The other thing that I'll get to a little bit later, but ON needs to record the value of the cash that it has on the balance sheet. So even if it keeps the cash that it has in US dollars in, let's say, a US bank, it needs to report the loss, the mark-to-market loss on that cash position when they report earnings. So it's a little bit confusing. Oftentimes I like to look at FinChat, for example, pulls all the numbers into US dollars. They can't necessarily do that from a balance sheet perspective because we don't get the breakout of how much of their cash is in US dollars. But when it's all said and done, the financials look a lot better when you look at a constant currency basis, which especially for US investors is going to be much more important. So that growth was actually 29.2% on a constant currency basis. This is the one that I thought was really surprising. Direct to consumer sales up 39% year over year on a reported basis and 48.7% on a constant currency basis. The reason that this is so important is product companies like ON have to figure out how to reach customers. Are you going to sell through wholesale channels? So like retailers like Dick's, Foot Locker, the traditional shoe channels that we've probably all shopped at one time or another. Or are you going to go direct to consumer? So, hey, come to our website, or we're going to reach you through an Instagram ad or something like that. That, in theory, will create a longer and better relationship with that customer long term, because you may be paying for an ad up front, but you can control the cost of that ad. You can control the inventory. You can control what email marketing they're going to see in the future. So it's really good when a company can grow this much with direct-to-consumer sales and be extremely profitable. And that's where the nearly 60% margin that they reported is really a sign that that is going well. The other thing they did is they said that they reiterate expectations for at least 30% growth in net sales on a constant currency basis and an adjusted EBITDA margin of 16 to 16.5% for the full year. So should be really good results for the full year, especially with things like the Olympics coming up. And they've talked a lot about that in the activations. And then there are reportedly some new products coming as well outside of just running. So we'll probably learn about that in the next few days and weeks. They do give a nice breakout of how things are going on a regional basis. So this is Europe, Middle East, and Africa grew 10.4% on a constant currency basis. The Americas grew 30.4%, and Asia Pacific grew 90% on a constant currency basis. So you can really see where the growth is, obviously resonating extremely well in the US in particular, and then a lot of potential to grow this brand in Asia Pacific. The other thing is they're getting much more success outside of just shoes. So if you might remember, ON started as really a running brand and a premium running brand, but now they moved into apparels, which was up 24.9% in the quarter on a constant currency basis, and accessories up 42.9%. So that really broadens the business, allows them to sell more products to more people. And they've talked a lot about that. I think the company was really conceived to be this premium running shoe built for a specific kind of person, but now they've said, hey, we need to broaden our product lineup, not only with the kind of shoes that we're selling, but with the kind of accessories and apparel that we're selling to reach a bigger market, people who are built with different sizes. You know, maybe we don't need our products to fit just runners. We need them to fit people who are starting to work out, starting to run. So I think that is really broadening who they're reaching from a customer perspective. As long as you're somebody who wants to pay for these kind of premium products that they're making from ON, they want to serve that market overall. This is the full income statement. And again, this is in Swiss francs, but you can see that this gross profit number, $303.3 million, nearly 60% gross margin, just an incredible margin for a product company and a brand company like this. They are spending a lot on selling general administrative expenses, which that's what you would expect. There is going to be expenses that happen ahead of growth. So if they want to keep growing at 30% a year, they're going to need to build out sales teams. They're going to need to build out products and inventory. This is the upfront cost that it takes to grow. And that's why it's so impressive that net income was $91.4 million for the quarter. And that's why it's so impressive. And that's why it's so impressive that ON is still profitable. I want to go through these numbers right here because I think this is important. They're making an operating profit, $38.5 million. That's down a little bit from a year ago. Nothing too much to be worried about. But the big change here is this number right here. Remember when I said that cash that's held outside of Switzerland or outside of Swiss francs needs to be adjusted on a month-to-month basis. That's where there was a loss last quarter. There's actually a gain this quarter. This is going to ebb and flow over time. But that's why you see net income jumping as much as it did. But that's going to fluctuate because we saw a loss last quarter at the same. But if you pull this out, you get to net income of closer to about 38 or 39 million Swiss francs. So that's really a better proxy for how the company is doing right now. Cash and equivalents, 584.6 million Swiss francs, and there's no real debt on the balance sheet. So things are looking pretty good for ON Holding. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. At the end of the day, ON Holding is performing extremely well. The market's reactions seem to be extremely volatile depending on the quarter, depending on what single number is being focused on. But if you take a step back and look at long-term, where this company is going, what the trajectory is of the business, growing at 25-30% per year for the foreseeable future is just a phenomenal rate of momentum for ON Holding. They're getting into more markets. It sounds like there's more sponsorship deals coming. So that could potentially impact the company's sales and continue their growth trajectory. And I think this is a pretty reasonably priced stock. Like I talked about earlier, this is not a company that you would expect to be extremely profitable right now because they're not optimized for profits. They're optimizing the business for growth. So if we look at something like enterprise value to sales, right now, this is before earnings were announced. FinChat has not updated these numbers yet, but that's about 4.75. So more like probably 4.5, maybe even a little bit lower than that. That's a pretty reasonable multiple to be paying for a company that's growing at this rate. Even on a forward basis, a price to earnings multiple of 45, I think is a pretty reasonable multiple given the fact that we're probably going to see their net margins increase over time as they get to more scale in the business. So I think everything is going extremely well for ON Holding. Their performance continues to be really well in races. That's going to be key. They're expanding from running into tennis, into probably even more sports going forward. And I think the casual lineup and the fact that people are just simply buying more casual shoes now and want those to be comfortable rather than work shoes that people were maybe buying 10 or 20 years ago is another piece of momentum just for this space overall. So I love where ON Holding is headed right now. I'm a shareholder. If there's weakness in the stock going forward, I would definitely be looking to buy, but nice to see the reaction today. What do you think of ON's results? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.